All right, welcome back to the show. Today we've got with us Dan Young. Dan is a serial entrepreneur, done a lot of things you're going to hear about in today's episode. You've already heard a little bit of his resume coming into this, but won the Inc. 500, around the Inc. 500, 4 or 5 times.
Yep.
Xidax, huge gaming online community. You've done PC laptops. You've done all sorts of stuff, built teams, and you actually do a lot of real estate projects on the side as well right now.
Correct.
Has been pitched by many young fund managers, young syndicate managers trying to come get money from this guy. So we're going to walk through today's episode about how you run teams, how you structure teams, how you structure partners, and then also how people like us can come pitch you and get money from guys like you. Okay, so welcome to the show.
Burning a hole in my pocket.
Yeah, Dan, how you doing today?
Great, dude. Thanks for inviting me on, man.
This is going to be really fun. So let's start out first off. Tell us a little bit about your story. I know now you're, very high net worth, doing very well, ran multiple companies. And give us an overview of your businesses right now, all the spaces you're in and what you're doing currently.
Okay, so we have a company called Xidax, Xidax.com, and we sell high-performance gaming computers, and they're also used by content creators and just anybody who wants to play some video games.
And you custom build them?
Right, custom build. Well, you actually custom build them on the website.
Okay.
And then we hand build them right here in the U.S. for you. Yep.
Awesome. And then you do that. I know you do contracts with government agencies. You do all sorts of stuff. Gaming computers is kind of the main gig right now?
Yeah, a lot of content creators are using them to actually make video games themselves and new movies and things like that. But also pro gamers, everyone who's streaming online.
Yeah.
Yep.
Cool. And COVID's, I think, helped you guys a lot, right? Everyone's online. Everyone's want a new gaming computer. Yeah.
Yeah, play games and create stuff at the same time,
Yeah, that's cool. Okay, so take us back a little bit. I want to hear about your story.
Okay.
About your parents coming over from China. I mean, you told me the story over the weekend.
Okay.
I was amazed. This is a really cool story. And then your hustle as a young kid, get in the entrepreneur space. I'd love to hear it.
Okay, so my parents grew up in China, Shanghai, in Qingdao, China. And there was a war during this World War II time. Communist invasions, all kinds of terrible stuff. They were really pretty well-to-do people in China. But when there was this big war and invasion, they blew up their house and took everything they had. They went from everything to zero.
Wow.
Right? And so my dad helped some American soldiers on a little mission. And helped them defeat some of the enemy. And so the soldiers helped them immigrate to America.
Oh, okay.
Right. So they all landed in LA, right? And
what years is this about?
This is like 1940 something, late 40s.
Somewhere around there. Okay.
Yeah. And so then my dad was a janitor. My mom got a job as a bank teller, counting cash.
And your parents were very well-to-do in China. You guys were wealthy, doing well.
Oh, they were
come to
super
America,
doing great. Yeah.
And now your dad's a janitor. How was that for your parents? Was that a big status?
Yeah.
Was it hard for them, or how was that for them?
Not really weird because they've been super humble people, and so they're like, you got to do what you got to do what you got to do.
Yeah.
So cleaning floors and all that stuff, So what happened is after he did that, he started he went to art college, Pasadena Art Center.
Okay.
And then became one of the head art directors for Mattel Corporation. They make the Barbie dolls and Matchbox cars and things like that. And he actually had an assistant who was this blonde-haired, blue-eyed guy because there was a lot of racial tension back then, with all the war going on with Japan and everything. He became one of the top artists there, and my mom did really well in banking. Got promoted pretty well and did well. So that was me, born in Los Angeles, California. Yeah.
So they're living. Truly, I love immigrant stories, and I think there's a lot of books I've read. It talks about the immigrant mentality and why immigrants do very well in America, typically.
Yeah.
More than other demographics, which I think is pretty cool. So you get born in LA. You're raised. Walk us through, and walk us through how you got started in entrepreneurship.
Okay, well, I was kind of a bad teenager, right?
Yeah.
I got in really big trouble just doing really dumb things, right? Partying too much. And so I actually went to juvenile detention facility for 6 months.
Oh, shoot. Okay.
Yeah, I was really a bad teenager.
Yeah.
So they exported me to Utah, where my sister was working at the University of Utah as an academic advisor. So she took me in, kicked me out after 30 days, and I'm like, I got to pay rent, right? So I started selling carpet cleaning, telemarketing, carpet cleaning. And in the very beginning, I think the first month, though, I made like $5,000 just selling carpet cleaning. And I'm like, this is not hard.
That's not bad, right?
You just got the phone book and you're dialing.
Yeah.
On weekends, I would sell Ginsu knives, those crazy commercial knives, brass knuckles, pepper gas, stuff like that at the swap meet.
Okay.
Right? And at first, I set up this table like this, and I put the goods out, and nobody was buying them.
Yeah.
But then I started watching some crazy commercials, right, on TV.
Yeah.
Bruce Lee movies and things.
Okay.
And so I put on my karate gi.
Oh, you went all out.
I totally wore my
decked
gi.
out, okay.
Got my samurai sword thing and all the
Yeah.
knives and stuff, and then I started like dicing and slicing in front of everybody.
Oh, wow.
And we made like $1,000 or $2,000 or something the first day.
Yeah.
And then the next day we made $1,000 or $2,000.
Oh, wow.
So it was just fun, man. You go out there, have fun, and sell stuff. You know?
And I know just from your personality, you're an entertainer type.
Yeah.
Yeah, you like that kind of stuff. Did you have to, was it pretty scary learning? How did you learn? How to do
Just
the
copy the
Ginsu
guy
knives?
on TV, you know, he's
Just-
cutting the vegetables, you're cutting the vegetables. He's cutting
Yeah.
the rope, you're cutting the rope, you know.
Jeez, that's
Yeah.
awesome.
So then it shifted, though. It shifted big time, though. Because I had this desire to go into tech, right?
Okay.
I really wanted to go into tech. So I worked at Radio Shack in the mall,
Okay.
right? Sold
Getting
this,
into tech, yeah. Radio Shack, yeah.
Yeah, I was like
That's
the
tech
techie
career,
place
yeah.
back then. So I got the job at Radio Shack, and this old guy comes in, and he needs a fuse for shortwave radio. So I hook him up, and I'm like, okay, got him this fuse. He's like, you know what? Do you need a mentor? And I was like, oh. So he went to lunch, and he said, hey, I sold my company for almost $500 million, and I'm kind of bored now. Play with my shortwave radio. He's like, maybe we can meet once a week and teach me about tech stuff, and I can teach you about how to make money. And,
It's a good setup, yeah.
yeah, from there it got great. And then, to make a long story short, I went to work at this other place called Silo, which was like a Circuit City Best Buy type
Okay.
of thing. Became one of the top sales guys there selling computers. They went bankrupt after I became like a district manager. And so I got the list of all the customers who bought computers, and I just cold called them and told them I'd honor their warranty.
Oh, wow,
Right.
okay.
So that
Yeah.
first year I lost 27 grand in the red, and the next year we did over $1 million in rev and made like
Whoa.
300 grand or something.
So wait, hold on. You
Yeah.
took the risk, you called them, said we'll cover your warranties, and that cost you a lot of money.
Oh, dude, negative 27.
Negative 27 grand.
Yeah, that's all I had, man.
Oh,
and my credit card, something. Yeah, it was crazy.
But you knew you were banking on they were going to come back, repeat purchases. You were going to build a customer base, which it worked. Did $1 million next year. Jeez, that's awesome.
So then we started PC laptops, and that's our retail.
Yeah.
And then fast forward a little bit, we started a cloud company, Storage Whale, right?
okay.
And they do enterprise cloud backup. And then we started gaming computers about a decade ago, and it's been cool from
Been
there.
just up since then. Yeah, and gaming, all those industries are blown up. It's a
Yeah.
good place to be. I think something, at least from my point of view, looking at your whole career, you're really good at sales.
I
From
love
day
selling.
one
Oh yeah.
to right now, you're good at sales. And a lot of people watching, want to start a fund or want to pitch people, and it's just sales. And I always say, good fund managers are good marketers or good salesmen.
Right.
Because then you market your fund, whether you think you're marketing or not. You're doing marketing. So walk us through some of if you're talking to somebody that's brand new into sales, whether it's selling carpet, selling computers, or selling a fund, or selling a real estate deal. What are some common threads that you've seen in the sales world that you could teach somebody on the show?
The big thing is, to sell, you need to have a lot of energy, right? You need a lot of intelligence, and you need a lot of integrity. Those three things are like the magic recipe to being able to sell. Because in selling, your idea is to find out what their problem is and present a solution, right? And solve their problems, hopefully continuously, right?
Yeah.
And that's how you build repeat business.
So, energy, intelligence, integrity.
Right.
So do you look? I know you hire a lot of sales guys. Those are the three metrics you look for when hiring?
Almost as simple as that. Yeah.
Just you've boiled it down to those three things.
Yeah, I don't care about degrees or whatever. It's like.
And are those things you need to be born with? Like, is it just like, because you always hear the term, well, I was a born salesman. What do you think? Is it nature or nurture with sales guys?
Well, mama taught you integrity, right? Your energy can be cultivated, but a lot of times maybe you were diagnosed with ADD or a spaz or whatever, and you had a lot of energy,
Yeah.
or maybe you were just high energy. Maybe you were good at whatever you did.
Yeah.
So the intelligence part, it doesn't have to be massively high. You just need to be competent in what you're selling.
Okay.
You know?
So you're saying it's 50-50. Yeah, there's things you can cultivate and develop, but also born with a little bit on there. I like that. Okay.
Yeah. Anybody can develop those areas.
Yeah.
Too.
So you now do a lot of real estate deals. Is that right?
Yeah, haphazardly I got into real estate
Okay.
by buying the locations our retail stores occupied. And that was like the beginning of real estate. But,
So you're just buying your own building, using that. Then from there, what? Like, have you done other stuff, or you're buying your buildings, or what does it look like?
So buying our buildings though, and then I started buying a lot of residential
Okay.
properties in Sugar House, Utah.
Okay.
Right there. Lots of just fixer-uppers and that,
Uh-huh.
rolling up your sleeves, getting stuff fixed up, flipping those, quite a bit. And
Are
then
you fixing them up? Are you out there doing Chip and Joanna
my
games?
first
or
house.
You did one house.
the first one was horrible.
Okay.
It turned. I can't believe someone bought it, but
Okay.
And then,
did you want to just do it for the experience or try it out? Because you'd already made money by that point, right?
yeah, doing pretty good.
You're doing pretty good. So like, why take 2 months off and flip a house?
Just to understand what it takes. I wanted to understand. So like anything, like building computers, I actually built them with a screwdriver, selling them. So every role in my company, I wasn't the best at, but I wanted to understand how it worked and the struggles, you know?
Gotcha, okay.
So that's why.
So you flip the house, but the other houses, so you do a lot of residential. What else do you
do? So now I've moved more into commercial real estate. So what we do is we take empty big box, like an empty Kmart.
Okay.
We'll take that, we'll gut it out, right? And we'll make it nice and fresh. We'll put in either office or medical in there.
Yeah.
Throw a nice coffee shop on the pad, or a car dealership if it's big enough. That's typically what we'll do. So we'll take grungy stuff and make it really nice.
Okay, that's interesting. And have you done this already, or is it in the process?
Oh no! In fact, our last one that we did is in Midville, and we did one. We did some in Orem and then downtown, and so I'm looking for more because I think there's going to be a lot more empty big box, opportunities.
I've actually had a few people on this show talk about that opportunity, and everyone's got different ideas. It's like, hey, we've got a JCPenney, and we're going to gut it and put in X, and then you guys are going to do Y, and then everyone's got this cool idea, and I think it's a very good opportunity. Right? People need space, but maybe just not JCPenney space. They need something else. Are you raising money at all, or is it just all your money? How are you guys doing these deals? If you don't mind me asking.
I haven't raised $1 for our companies or for anything, but that's actually why I was really interested in visiting with you, and also, your family, you guys do that. And because I have so many friends, though, that really want to invest, and they don't know where to go. We're all tech guys, right? So we know how to make cash.
Yeah.
So I've really self-funded all the deals right now.
Yeah. Gotcha. Okay. So I want to ask you now. We're going to circle around a lot of different topics here, but I want to ask you about you run a lot of businesses, right? A lot of irons in the fire. I want to first off ask you how you do that. What's your mindset? How do you manage each one of these business verticals? How do you hire partners in those verticals?
Okay.
Explain to me the systems that you use, that you think about internally to manage those. I don't know how many companies or things you're running.
Like
right
5
now.
right
Like
now.
5 right now. Yeah. How do you do that? Walk me through the systems and still be
okay.
sane.
Where do you want to start?
Let's start with your computer businesses.
Okay.
Yeah.
Cool.
And then we'll go into real estate. Yeah. So I want to hear the whole portfolio and how you manage that portfolio of companies.
Okay. So it's really not that tough to do. First things first is get down and write down a piece of paper every single system process that you have, because if it's written, it's real. You document everything. So it has to be that someone could pick up this instruction manual and execute on that without a lot of question marks, right? So you do all the mathematics and about how everything is done from the sales pitch, written in a script. I mean, it should be done the same way. The way people are greeted into like retail, if it's retail locations, to how often the teams report out, right? Like we need these reports at this cadence, right? And then what we do is we automate things so that these reports fire off automatically, so you take out some human error with that. So that's the basic fundamental of that. But then also you need great people, right?
Which, I'd love to talk about the people you bring on. And I've been, actually on this show, I've been preaching this last 6 months, is entrepreneurs are good at just building stuff, getting stuff off the ground, and just making stuff happen. There's a transition, though, that I've been going through right now, is between an entrepreneur to a CEO. CEOs are in the business of building systems and managing systems, and they're not doing the entrepreneur. They got to transition eventually. And I feel like I'm in this process. We've hired a dozen or so people in the last 3 months.
Yeah.
And I'm transitioning to that point of, and that's good advice for me, of writing things down, making systems, and then watching how the system runs. Would you say that's an accurate way to describe it?
Exactly. Super important. But people are the core foundation. So no matter how great it is written, you have to have the right players.
So walk us through players then. How do you bring on, and a lot of people are launching funds, businesses right now, partners, early stages of doing that, and then later on bringing on good players as well? Yeah,
so a few things. With partners, I have done some of our deals before where I did bring in some partners, right? And a rule that I always put in there is I don't usually like more than one like high level partner in the beginning calling the shots, though. If someone can actually make ultimate overriding decisions. If you have 3 guys, then 2 guys gang up on 1 guy, right? A lot of times. So my role has been have really at most 2 really strong, and usually they'll complement each other, because one guy will be more the sales, super energetic guy, and the other guy will be the analytics dude and the process guy.
Yeah.
And that's like Mentos and Coke,
Yeah, it just blows up. Yeah.
Yeah.
So have your business has been that way? Are you more of a solo, like I like to do and I hire teams, or do you have partners? You brought on a few partners with you.
So what I do is when I bring in partners, though, I usually will find a shining gem at usually one of the larger tech companies out there in California or whatnot, and we'll court them and recruit them.
Okay.
But really is the biggest fear that a lot of these guys have now is, and what they hate is working for a big publicly traded company is they're treated like a number and they feel expendable, right? So they don't really feel like they're making a difference, right?
Yeah.
And so this is an opportunity where you're hiring people who could actually be your competition, right?
Yeah.
You should hire people that you would actually work for yourself, right? That's prime. And then you create a really great compensation plan, which gives them a 15, 20 year outlook on their future. So you need to have their 20 years laid out because there's so much jumping. But with a partner, a lot of times when you're operating, it's great to have one that has a long-term commitment, unless something amazing happens and someone writes a massive check, right? Yeah. That's at least been my theory.
So what does that compensation package look like? Is it usually just equity, or what are you doing, especially with your top players? Maybe they're not equity owners, but how does that look like?
So what you first want to do is find out what their burn rate is, right? Every month, what does it cost for them to operate their own personal household?
Okay.
You sit down, you write that down. And the idea is to pay them more than that. But you ask them, if you had to live on ramen noodles, what would it take? That's their fear zone. And if they're running outside their fear zone, then what happens is they have anxiety, performance anxiety, and they don't do well, and they'll be job hunting at the same time, right? So you always pay more. And it's okay to give a little bit more, right? Then what I like to do is pay them either on revenue or gross profit, depending on their mental maturity level.
Interesting, yeah.
So if they're younger, a lot of times they like revenue based. Hey, we sold this much, I get this percentage, right, of the net of the revenue. Or if they're a little bit more mentally mature and they can actually adjust and control and tweak a lot of the operational costs, then you make them on a net profit.
Net profit, okay.
Yeah.
And these are, and so most of your employees, how many employees would you say are on some kind of revenue or gross profit sharing program?
So I always put commanders. And what I mean by commander is it's usually one commander for 12 men and women. Okay. It's like that's the ratio that I found that one person can manage at most 12 directs.
Okay.
Right, and then you'll create a sub-commander and so forth. If you're running a subdivision or a separate company, you pay them off that unit.
Right. That business unit.
You pay them off that business unit, though. So they get a basis of revenue or gross profit, right? But also what I like to do is do what they call an escalating percentage of compensation. So every year they're running that deal for you. You give them another half a point, quarter point, 1%, whatever it is, and you draw that out as a 15-year plan.
Okay.
Right? And so your retention is great. But
you sit down and actually pull the calculator and say, this is year 5, year 7, what you should be making if we're hitting our goals.
Yeah, you just punch it into a spreadsheet. And it's like a giant pro forma.
Yeah, year 15, you're going to be a multimillionaire kind of a thing.
Yeah, and it's worked great because a lot of the guys, I was like, man, after 3 years, I'm making $300,000, a year. This is great, and that's money that they may be making if they did their own deal, but they can see the future, and they're using your money, so they got no risk. Yeah. Right. So it's good for them.
That's a good way to do it, and that you said that helps with retention.
Oh yeah.
Quite a bit, right? To keep and maintain good people in your companies. So that's on your retail side of things. Is that similar model when you're doing real estate deals or your other verticals?
Most of the real estate deals have been in the beginning were projects that we were occupying, and the real estate deals that we do now, we're not bringing in a lot of partners though. Right now, most of those I'll just self-fund and make it happen.
And then you bring on one. Are you doing the deal? Are you thinking through the deal? Or you bringing on a good real estate partner? You're like the money guy, and you bring on a real estate partner, or are you thinking through the real estate and actually the mind behind the real estate as well?
Both. Yeah.
You do both.
Right now, I look at it, do the math on it, do everything on it, buy the deal, then hire the guys, fix it up, do what we need to do, and then of course you'll use real estate agents to lease it out and all that kind of stuff.
Yeah.
Right?
But you're doing both then. You're kind of doing all of it together. Cool. So do you have any other big partners inside of your real estate deals, or is it mainly just you?
No, just me.
Just you. Okay. Wow. It's impressive. Okay.
Yeah.
Wow, that's awesome. Well, I'll have to check up on you in 6 months, see how these deals are doing. A year from now, see what's going on. That's pretty exciting. Now, you mentioned to me earlier that you were looking at launching a fund potentially.
Yes.
Just because you had so many friends who had money.
Yes.
They were like, Dan, what do I do with my money, right?
Yes. That's where I need your
expertise. Okay, people listening to the show, there is so much money out there. Stop. I get people always tell me,
man.
Would you agree?
Yeah, I mean, every week I'll get 2 or 3 guys calling me, "Hey, dude, I got an extra $1 million. I got extra 2 or 3 million. What do I do, man?" They're like techie people, my circle, right? And so they're like, "What do I put it in?"
You know? Yeah, and you're like, oh, yeah. There's a lot of money out there. So whoever tells you, people listening to this show, there's money.
Oh yeah.
You just got to have a good enough deal, good enough, and get in the right room to pitch those people. So let's talk about that for a minute.
Okay.
Now, I'm guessing, we talked about this earlier, I'm sure you've been pitched a lot, right?
A lot.
A lot by people, whatever deal it is. It could be anything, right? So I like having you on. So to take it from the other side of the table, a lot of us, we talk about the structuring of the fund, getting it ready to go to pitch someone like you. What are some things that you would share with people like us, me, or people listening to the show, launching a fund or syndicate, looking to pitch a guy like you, some do's and don'ts that you would see inside of a pitch deck or a pitch room when someone's pitching you on a deal?
One thing I like to see is really clear math. And, you know, I see a lot of guys coming for money, but they don't have very clear pro formas of where it's going to be, or it's just wishful thinking pro forma, you know?
A little too many assumptions.
Yeah. I mean, that bugs me. The second thing that I think is really, really important, that is if there's already some other guys, you know, within, let's say, your circle of influence that have participated, you know, that have done a few more deals before, then it makes me more confident.
Interesting.
You know, kind of like Jeff, you know, one of our mentors, right? Jeff's like, yeah, I did that. Yeah. Okay, man. You know,
you feel good about it. Yeah, if somebody else you know in your circle has already invested in a similar deal or that same deal.
Exactly. Especially if they have way, you know, deeper pockets than you and they've put in, then it's like, well, okay. And if you have a long-standing relationship and they tell you it's pretty good, that most of your diligence right there, if they've already done a lot of deals.
Interesting.
Yeah.
So don't underestimate the value of a referral. A referral from someone that you respect.
Yes.
You're a lot easier to say, yeah, I'll pull the trigger and write a check. Interesting.
As long as it's in their area of expertise of deals, though, because I've had like really awesome, prominent mentors in my circle that, you know, they're like, this looks pretty good, but it's not an area that I'm really too familiar with. What do you think? You know, I'm like, whoa. They're like, I put a little bit in there, and then we're gambling, right?
Yeah.
We're picking a random stock.
Gotcha. Yeah. Okay, so you mentioned math. Make sure the math is correct. Secondly, you know, other people in your circle, social, I guess that's social, whatever you want to call it, what is it called? Social influence, or
your circle of
your
influence.
Circle of people that do it. What else? What else would you say for a deal that you're like, if they do these 5 things, I'm a yes every time?
Collateral.
Okay.
I mean, that's major. So, for example, there's a friend of mine. He came to me with this deal he wanted me to put in, and he had a bunch of check cashing stores. They wanted to open a whole bunch more, and so I wanted to look at the books of what was actually going on. And he gave me some of his pro formas and stuff like that, but he had collateral. So he's like, you're gonna make this much is what we're looking at, but these assets back that. So if you know if things get dicey, you can get those. So we can file sometimes on some of these deals, like we can file the UCC and things like that. So we have massive collateral.
Mitigates your risk a lot.
Oh yeah, that gives you sleeps really good if it's solid. You know.
Yeah, gotcha. Yeah. Okay, so collateral, I love it. Anything else?
Collateral's I mean that's actually a big decider. And then you know, a rate of return that's above the median of deals like that. You know, I mean, as long as the math backs it. You see what I'm saying? Yeah, because a lot of times I see so many, probably 90% of them, that these guys run up and they don't even have a good pro forma, and the math doesn't add up. And it's almost like they had an entrepreneurial seizure, right? And there's like, hey, let's get money for this. And you're like, dicey. And, you know, I just say no.
You'll just pass. Yeah, just pass.
That's cool, bro.
Would you say you're a pretty active investor in other people's deals, or do you? I mean, you obviously invest in your own deals a lot. Would you say, hey, usually I'm just gonna invest in my own stuff? What would you say?
I'd say probably the majority I invest in my own stuff, but when I do invest in other deals, which I have, for example, we invested in a chain of car lots, right?
Okay.
And they had good books going back like 5 years, and it was obvious, right? It was completely obvious, and they just needed more square footage, and they needed another location on the other side of the valley, right? And all these things, and they needed money to have inventory. I'm like, this is no brainer.
Yeah.
Let's go.
Yeah.
Because I mean, it works.
And you got collateral. You've got did you have collateral on the cars at least?
Yeah. So he's like, your accounting people, your people can hold all the titles, man.
Oh, really? Cool.
Yeah. So we had stacks of titles.
So it makes it way safe for you and easy for you to do.
Yeah. Nothing to lose.
This is a little personal question, but have you ever had someone pitch you that's committed fraud or stolen money from you?
Absolutely.
Yeah.
Oh yeah.
How did that? And have you ever? How do you look through and detect fraud and detect if someone's lying to you? Because a lot of us, people watching, even like me, I'm going to look to buy a real estate project, but I've got to look into fraud on that project as well. Right?
So it's the partner. It's the partner. The people who are the guys. Great people leave great things in their wake.
Okay.
So reputationally, if they have left great things in their wake, because if you Google somebody and they've got a lot of horrible horror stories going back and the FTC rulings and all kinds of stuff, well, don't deal with that guy, right? I mean, it's as simple as that. If they've got a clean track record of good deal flow, then you do your diligence, right? And then
you'll do a lot of research on the person.
Oh, background check them.
You do the whole thing, hey?
Oh, man, everything. I'll look at them. I'll have my guys look at them on every one of their social media platforms, see what's going on, see their history, what are they posting, what are they about. Because you got to know, especially with the smaller deals, where you have a guy, hey, that's a great idea.
Yeah. And you got to trust on the character of that person. Interesting. No, I really like that. And I think it's funny, it's 2020, right? Or everyone talks about, well, it's contract. There's not really the handshake mentality anymore. But I've actually interviewed a lot of guys like you that say that. They'll say reputation has a lot of weight. And your reputation spreads fast. Don't underestimate your reputation doing deals in this space. If you screw one person off, or, bone them somehow and it doesn't work out, that's going to trickle and tell a lot of people in the area, the valley, whatever you want to call it, are going to know about that.
Oh yeah.
And I think that's valuable for people like me to know, starting young in this, in this path.
There is something that you want to do. I want you to do this immediately if you haven't though. In LinkedIn, you're on LinkedIn, right? You want people to write testimonials of good deal transaction.
Interesting.
Right. So if they're high level people with a large network, hey, I did a deal with this guy and he helped us a lot and it really worked.
Yeah.
And if you get enough of those going back, the more of those you get, you can even send your LinkedIn profile, and that'll establish confidence because they probably might even know someone who knows them, and they can validate your
reach out directly
authenticity.
And validate it. Oh, interesting. That's a cool way to do it.
Yeah.
It's almost like gathering reviews for yourself.
Yeah,
I haven't thought about that.
It's like
interesting.
Your own brand.
That's really smart. So you do a background check. Anything else you do for detecting fraud on a deal? So you check that person out. Let's say they're clean. Anything else you'll look at to make sure that it's not a fraudulent deal?
Just like it's like a credit check, right? So you talk to other people that have done deals with them. How did it turn out? And they're going to give you one thing. Oh, man, it was great. Or they'll give you that, I don't want to say, man.
Yeah.
Or they'll say, and it's like horrible nightmare.
Yeah. Gotcha.
I mean, it's not too tough to do that.
To detect.
Yeah, and even, simply, you don't have to know a lot of these people in their network. If they say they've worked a deal with this guy or that guy, you can just direct message them, hey, I'm thinking about doing a deal with this guy. Did you have a good experience?
Yeah.
They're either like, if they're under NDA or something, they can't say anything, and it'll just be like, can't comment. Then they suck.
Yeah. Interesting. So today, what's the date today? It's like, what are we in? We're in October 2020.
Yeah.
The filming will probably get us out in a week or two. What is your outlook? And from your chair, your position, running all sorts of tech companies, you're in the real estate space as well. What is your outlook for, depending if Trump or Biden wins, we don't know. We don't know yet. Maybe by the time this comes out, we'll hopefully know if we have a president. But what does your outlook look like for 2021, 2022? Assets that could possibly be purchased, industries that will blow up. I mean, we have stimulus money. We could have inflation. We have all sorts of threats coming on. What's kind of your outlook on things right now?
I'll say, let's just give you two plays, whether it goes left or right. How's that, right?
Yeah.
If it goes right, we know it'll be favorable for new tax laws to pay less taxes, capital gains staying good, estate taxes good, depreciation being nice and juicy, and all those beautiful things. So that's a no-brainer to buy, and I think there'll be some confidence to continue in incentives to keep developing more. Right? So we'll probably experience kind of what we've done in the last 4 years before COVID, right? And have this constant tick up. And the government will encourage deals, right? They'll really encourage deals. If it goes left, it'll actually be a great grand opportunity as well. It's not going to be the end of the world. They'll change the laws around. It's not going to be actually as bad as a lot of people think. And if it does go left, we can't do anything about it anyway. So you just got to take advantage of it. And one example was when there was a big change from like the Bush administration over the Obama administration, you just saw them change some laws. And an example was back in the Y2K and all that, year 2000. Everyone was buying like a H1, a Hummer 1, or big, huge vehicles, right? Because you could write off with a Section 179 pretty much the whole vehicle, multiple vehicles. So people are like, let's buy big trucks and big cars, right?
You could buy a couple of these and just write them all off?
Oh, yeah.
Total tax deduction?
Yeah, I mean, if you talked to your CPA and did it right.
Really? Okay.
It was really, so that's why everyone was buying Escalades and
Hummers and all sorts of big, heavy usage cars, yeah.
Yeah, so they changed the law. So they're like, it's unfair for wealthy people to buy all these luxury cars and the government subsidizing them. But again, people on the top of the left and the right, they're all wealthy anyway.
Yeah.
So they want to take advantage. So like, we're removing that. But they didn't tell you they changed the law so you could 100% write off certain types of business leases. So then everyone just started leasing Lambos.
Yeah, they just go lease.
Yeah, get like a Lambo, a Ferrari, a McLaren.
Yeah.
You know, and run that.
Write that off, yeah.
So it's just a shift. And so the big thing is just to be educated on how they change those laws. Plus, I think what we'll see is this. If we do go left, if they futz with capital gains, right? So short-term,
like
long-term capital gains. If they make it, full income tax rate based on like ordinary income, you may see some corrections in certain areas of the market. And maybe Utah's been a little bit insulated here where we live, right? But across the country, you may see some interesting stuff. And that's a grand opportunity to buy.
So and I love the way you look at things. And that's how I love, most business owners I talk to, they go, well, I'm going to vote one way, but if either way that happens, I'm going to make money either way.
Yeah.
So I'll figure out the loophole or the way around it, right?
Oh, yeah.
Which is a very interesting way to look at things, right? Is whatever happens, I'm going to take advantage of that change. And so you're mentioning, so if it goes left, like we're saying, if it goes left, some certain opportunity, do you want to expound upon what you think? Now, we can't give investing advice on here.
No, we're not giving this.
This is all personal opinion.
So talk to your financial planner and CPA.
But what do you think? What are some areas if Biden wins that will shift? There's going to be a big money shift in those areas.
So if you talk equities, first of all, stocks, right? If they take away some of the corporate tax law changes that came into 17, that's going to lower the earnings, right? And that could cause an adjustment.
Hurts their companies, yeah.
Right.
Interesting,
But again, once it adjusts, everybody gets over it. Okay, this is the environment we're living in. So bye, right?
Yeah.
And then it will go back up because people got to put their money somewhere, right?
Yeah. When we got a couple $1 trillion moving to the markets,
right,
that have to go somewhere. Yeah, exactly.
Got to put it somewhere, right? Where are you going to put it, right?
Yeah.
And then I think also you'll see with real estate, we talked about, you'll see some adjustments there because of capital gains. One thing I do think it'll be interesting when the election happens, once they've decided who's actually president, if it happens within before the end of the year, right, and they figure out like who's the president. Yeah. If it goes towards Biden, you will probably see a lot of old dudes selling their property because they're going to be like
1031.
Well, no, they're going to want to sell it because they're afraid they're going to mess with capital gains maybe in 21.
Okay, gotcha. And they want to get that tax.
Oh yeah, let's sell it and just pay 20% or whatever it is right now, whatever the rate they're in, versus ordinary income.
Interesting.
There will be a mad rush, especially for a lot of these guys the older guys that have like strip malls and things like that, and that's their retirement income.
Yeah, interesting.
So there'll be a grand opportunity.
Huh. Interesting. So you'll think a lot of selling might happen if they're planning on tweaking capital gains.
Oh yeah, man.
Yeah, everyone get out, get my tax incentive now. They've also talked about not doing 1031 exchanges as well, right? So you think that'll obviously that's going to slow down the transaction rate of real estate because now you got to factor in, I'm paying taxes every time I buy and sell this property.
Oh yeah,
right. So interesting. So you think a lot of people will be dumping properties if that's the case?
Oh yeah, man. Because
everyone's getting out.
Because if you look at the buildings that I've bought, right? The biggest building we bought was that 5-acre deal with 50,000 square feet sitting on it. They're not like millions of square feet or anything, but those are usually, a lot of times, they're just owned by some dude. And that's like, he bought it, filled it up with his business, and that's their cash flow.
Yeah, interesting. Okay, let's say if it goes right. Okay, if it goes right, Trump wins. He had his 2017 taxes. Do you think more stimulus money is going to come if the election's not on the line anymore?
No.
No? Not
anymore? I think it'll be maybe a little bit, a tiny bit. Yeah. Maybe some more PPP, maybe second round PPP. I don't think he's going to fire off big checks to everybody if he doesn't have to.
So do you think, I've heard about this looming recession for the past 5 years. Right? Well, there's going to be next spring, that's going to be the recession, or we're going to have this market correction. We haven't seen it because we've been, I was listening to Peter Schiff this morning about just juicing the economy with heroin, right? To just get it higher and higher. Do you think that correction's going to come if we get Trump in office? That correction will come, or Biden, next I don't know, 2021, 2022? Do you think that correction's going to happen?
Well, we've taken a correction already from COVID, right? The artificially induced one, right? And we took that, and that kind of got all the tension, I mean, it's a lot of tension because you had emotional tension, massive emotional tension, and then the upswing. What I do see myself as equities, especially in tech, right? Pretty obvious that it will continue as companies continue to migrate for future infections and things like that, that added paranoia. It'll shift from the cubicle culture, right, to hybrid space, right? So you'll see that open area, but more spaced out, and private offices. It's just a reconfiguration, almost like going back to the cubicle, right?
Interesting, yeah. An open floor plan. It's my dad always talked about this as well. He goes, just when the world changes, there's opportunity.
Oh yeah.
Dot-com bubble, big opportunity. 2008 crash, big opportunity.
Huge.
And in our lifetimes, you're probably gonna miss a few, but you might take advantage of some few. And some people that we've met in our space, both of us, that took advantage of the last crash.
Oh yeah.
And are 100 millionaire, billionaire type of people now because of correction. And so, kind of what you're saying, I love that mentality. It could go right, it could go left. Either way, I'm going to make a lot of money. I'm going to take advantage of a change. When the world changes, opportunities created for business people like us.
There's a simple rule to guarantee, to a certain extent, your success, and that's the law of dollar cost averaging. And so whatever you invest, whatever you make, you want to take a large portion of that every month and treat that like the biggest car payment you ever had in the universe, and allocate that for real estate or stocks, right? Because you really don't know where it's going to go. Yeah. So buy low, buy sell, buy high. It's fine. Yeah. Because when I look at real estate, I always look at a 5-year plus play. I'm always looking 5-year plus on anything actually. And for business, it's going to be 5 years plus. It's probably going to be 10 years plus, 20 years plus, right? For that investment, you want it to get to that level. Yeah. So that's the psychology I look at.
Huh. Interesting. Yeah. Well, hey, it's been fun to have you on, Dan.
Thanks, man.
I want to close today a little bit with your final notes for someone getting into entrepreneurship or just life lessons that you've learned. Let's give you 2 minutes on the mic. What's kind of your parting thought or word to this audience? You can even look at the camera and speak to somebody through the camera right here. What's kind of your parting advice or parting thoughts?
I think one of the most important things is when we talked about is having integrity. You have to be able to be that person that on a handshake, you would do it. You do what you say, even if it hurts, right? I mean, even if it's gonna like almost kill you, right? If it kills you, then you maybe want to think about it. But if it causes you a lot of pain, but it's what you said, you really, really want to make sure that you do what you say. That's the integrity line. Because reputation and relationships are everything. And if you act that way, you're gonna start establishing a relationship with someone who does what they say. And you'll get a lot of deals that are completely off market and things like that are brought to you because they know you can transact. They know you'll do what you say. And that doesn't matter whether you're doing real estate or raising money or whatever it is. Again, that track record. And now with the way that the internet is, that track record gets permanently emblazoned into legacy forever. You can't get rid of that. And you get one run through life, right? And if you do get disintegrous, then it's really hard to come back from that, So that'd be the main driver.
I love that, Dan. Don't underestimate the power of integrity. I think that's wise words. And I've heard this few stories, we didn't cover them today, where you got stuck with, you had to pay the bill or foot the tab because you gave someone your word. Yeah. And I've seen that in you and the stories you've told me about past business transactions. I think that goes a long way.
And if you're getting your butt kicked, by the way, and you have to eat it, right? Or some massive pain, tell yourself something one of my old mentors taught me is that's why you get the big bucks, right? Because ultimately it's your responsibility.
I love that. That's why, you get the best of both. Dan, thanks so much for coming in. How can people connect with you online or see your company's programs? Give us a few links or places we can go to learn more about you.
I would feed everyone to dansmillionairecode.com or Instagram, Dan's Millionaire Code, because there's links to all the companies I have and things like that. And
he's got a killer podcast, by the way, Dan's Millionaire Code.
Dan's Millionaire Code.
Go check that podcast out. There's a lot of interviews. Really great. Yeah, I've actually really love it. It's a great podcast. We'll drop the links below as well in the show notes. So Dan Millionaire's podcast. Dan's Millionaire
Code.
Sorry,
one word.
Code podcast, though. It's the and then your show and everything.
Yeah, thank you.
We'll drop those below. But Dan, thank you so much for coming on today.
All right, thank you, man. I appreciate you.